The World Bank estimates that Kenya gives up over 2.8 billion in tax exemptions. That's through exemptions given to companies on corporate income tax and VAT. Now, the government is planning to introduce even more exemptions. These will exempt a range of basic goods from dairy products to maize from VAT. As CGTN's Ramah Nyang finds out, not only are these changes not likely to reduce prices for consumers, they're also designed to circumvent the government's long-standing backlog of VAT refunds.
So some of the exemptions that have been introduced in this tax amendment bill are covering essential items, as you say. So some of them is milk. Yeah. So proposal to exempt milk, for example. There's also a proposal to exempt maize flour, to exempt bread, and also to exempt inputs that are used for manufacture of inputs or raw materials used for the manufacture of medicaments. Yeah. And also to move most of the medicines that are currently zero rated into the exempt category. So yes, there are essential items that are being moved from the zero rate category into the exempt category. Now, the problem is, what is the impact of zero rating as opposed to exemptions. Right. I think that's the key. That's a key thing that we need to establish. Yes.
But also the flip side of it is when you talk about credits that these suppliers can then claim from the state. It's effectively saying KRA owes these guys cash, right, via Treasury. Yes. And one of the main problems we've had for years now is that Treasury has built up this massive backlog of tax refunds that's not yet been sorted. So is this law perhaps trying to solve that problem by saying, okay, we're going to get rid of everything that's in the zero-rated category and move these guys into the exempt side?
Yes, Ramah, you're right. So by moving goods from zero rating to exempt, it's government trying to get away from the refund problem. Because where you have a zero-rated supply, then if you have excess input tax, then you can get a refund of the tax.
Let me step back a bit to around 2012, 2013 when we were working on the value-added tax, then the value-added tax bill. And one of the main concerns at the time was that the existing law at the time had way too many exemptions. But here we are 4 years down the line and it seems as though we're back to the exact same problem. Are we suffering from exemption creep across a lot of our tax laws?
Yeah, I mean, it appears, we're just going back because when we came in, when we were doing the review, when the review of the VAT Act was being done, and we eventually had the VAT Act 2013 come into place. I mean, one of the key things is to simplify the Act, and the other key thing was to reduce the number of exemptions that were there. And that was fine. So we started about 39 exemptions. And every year now, due to lobbying, due to government trying to meet certain interests, the list has kept on growing, and we're now 107 items. So this list just keeps on growing. The issue is, I mean, we need to relook at this because some of these exemptions, I don't think we are doing cost-benefit analysis to be able to check whether they're actually effective. That's why you see, I mean, for example, in 2017, you see, 2016, for example, they proposed to zero-rate LPG. Yes. And then in 2017, they proposed to exempt it. Then it didn't pass in Parliament, and now it's now they're proposing to exempt it again. Same thing with the essential commodities. They were initially exempt, so milk, your bread, your wheat, they were initially exempt. Last year, they were put into the zero-rate category so that we can reduce the cost to the final consumer, and now they're back to exempt. Now, what does that mean? That means that it seems that there's no real research, that goes into what is the actual impact of these changes.
Right, and on the health side, a lot of these exemptions we've spoken about, especially on medical inputs, that ideally should help to lower the cost of running hospitals, providing medicines and so on. So the proposed changes in terms of healthcare, I don't think they're going to have that effect in terms of reducing the cost of getting medication, the cost of getting healthcare, because they are moving them from zero rate to the exempt schedule. As I said earlier, if you move them from the to the exempt schedule, then all the costs that are incurred, to supply these inputs, to be able to manufacture the products, then the costs that are incurred by the manufacturers or the producers then will be passed on to the consumer. So I don't think it's going to make them cheaper. It's just going to add the cost of accessing medical care.